Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello guys, let's see what we have. First of all, the monthly statistics levels on the monthly time frame. Here we can see that price is ranging so far inside the two levels that we had marked out, the monthly wick averages. Both levels for the average close are still untouched as we are slowly coming into the second part of the month. For the range and the bearish part, there is actually plenty of time. As long as it ranges here, it also has the possibility to move down later, maybe even range the full month as I showed in the December statistics video. That means price stays in this range, and we simply need to wait for more clarity. For the bullish part, price would actually need to start breaking this level sooner rather than later within these last 2 weeks. Then it would have the chance to move higher. I'm not saying it would go all the way to the monthly average level, even though yes, it's possible based on the stats, but we are not so greedy. So I would say, if we get a successful break above this current level, then we can target the next level, which is around 102 to 103K, and then the higher numbers like 112K. That would be the first target if it breaks this level. If it's not able to go higher, then we will look toward next month's stats at the monthly open for the next levels. We will also have a new yearly candle, and there we can look for a top to be formed based on the candle formation, where I will pull the 50% fib on the yearly candle mainly on the wick, and the rise would then be a potential swing high formation for the year. This is just an example, so I'm preparing for the scenario in advance. It can totally happen that this year ends up way higher. So this is simply early preparation for the new yearly candle. That would be the bearish scenario, where it forms a swing high. And the bullish scenario would be this. The candle closes like it is, meaning it keeps ranging here, and the next yearly candle fills some of the wick to the downside and then breaks out. This would form an SR level or an order block on the yearly time frame. This would be something new, of course, because it would mean price was already in a bear market, which would break the 4-year cycle a little bit, I would say. So this is just an idea of how the candles could look, as I mentioned before. The first bearish scenario would be the more logical one for the 4-year cycle, where we see a rise to form the high and then a move down for the 4-year cycle low. Anyway, since we also need a bullish outcome for this candle, that's why I show this example as well. And well, after that, we can again simply have green candles and hold this level as support, or it gets broken down and becomes a yearly breaker or SR level in simple words. I want to note that I haven't seen this formation on Bitcoin before on the yearly chart, obviously. This kind of formation we often see on lower time frames, and maybe one day we will see it on the yearly chart as well. So I want to be the first one to show such an example on the yearly chart. The bullish scenario would be this, and then continue up by holding this level. And the bearish scenario would be this. The next candle opens and breaks it back down, forming a breaker level. In simple words, the SR level gets lost. We've seen this many times on the lower time frames, and the retest is usually a short setup for lower prices, unless it reclaims the level again. By the way, such a move would more or less match the typical bear market drawdown percentage, based on historical data. So realistically, this would likely be close to the bottom of the bear market if that scenario played out. And by the way, both examples I showed you on the yearly chart can also be found on the monthly time frame. And of course, you can find them on lower time frames as well. So here we had the 2021 peak. You can see that this would be a similar situation. If the candle closes like it is now, then the next candle opens, forms a high, and then we see the move down. That's the bearish scenario I would look for on the yearly time frame, meaning we would still get a rise to form the high of the year before the move lower. On average, yearly highs have around a 20% rise. That would bring Bitcoin to around 112K if it closes around here and then gets the rise for the bearish scenario. Price closing around this area would make the move up roughly 20% on average, which aligns with the 50% retracement level of the wick and the 112K target. From there, a move down into the 4-year cycle low would follow. And the other scenario we can see in the year 2024 and the start of 2025. Here we have the same situation. A bullish SR level forms while the next candle pushes higher, but the one after that fails and breaks the level aggressively to the downside. And as you can see, it acted previously as resistance, ranged below the level, and then broke back above. So that would be more or less the same on the yearly time frame, and from there it makes its way back up. Something to note, this is now the exact level once again that we are watching, and it is acting as resistance and needs to be reclaimed for continuation. And that's the yearly candle outlook and what we can possibly look for. As said, the second scenario would go outside the 4-year cycle, so I don't really expect it. And the second scenario would be more realistic, only if the bear market starts from a lower high. For this, I need to see a lot more things popping off to tell me the top is in, so it's something I monitor and can't say now. Statistically, the top is not in yet, so I keep monitoring what we get on the rise. Either I see those signs popping off on the rise, or if not, well, that often means we get a new high. And here we switch to the weekly cycle. Here on the chart we can see the daily cycle low seems to be in, and the next one would be by the end of the month. So what I'm watching here is whether we get a high formed after the 50% point of this cycle. If it makes a new high after or inside that zone, it usually signals that something is changing, and the next move might be bullish again, similar to what we can see happening here previously, where it forms the high after the 50% and then continues upward. When it forms the high before that and then makes a new low, that's a left-translated cycle, and we are possibly not done with this correction yet. For the weekly cycle low, which would be this low as well, we would need to see a break above the trend line, and ideally, a shift in momentum on the weekly time frame. Once that happens, we look for the same thing again, mainly the 50% mark on the way to the next weekly cycle low. So far, price has usually been forming them right translated, meaning after the 50%, which is typically bullish. If we see a situation where price rises, makes a high, and then makes another high after the 50%, that could fit the scenario I showed, where we see this playing out on the yearly time frame, and price continues higher, or it simply takes longer to form a high. And if it makes the high on the left side, like here, and if it makes the high on the left side and then breaks this low, it's a failed low and a left-translated cycle, meaning it can signal a shift on the weekly time frame, and we are heading down toward the next weekly cycle low. That would be the first scenario where we see the average 20% rise and then move lower without making new highs. Something to keep in mind. A left-translated cycle can form not only a lower high, but can also form a new high and then come down. That's exactly what we saw on the last top. So yes, price can absolutely develop a bearish move from here. The time window is around February, where we would either see a fast move up to form the left-translated high, or it forms as a lower high. As I said, for myself, I still need to see other signs as confluence, but this is a nice tool to use. And if we see a high formed and afterwards another high, that would mean nothing has changed for now. It simply takes longer, and maybe the move afterward will be sharper into the 4-year cycle low. Maybe we even get something like this on the yearly chart. Just faster, not over 2 years, but fast enough to complete the 4-year cycle low. We'll see what we get. For now, I am simply looking at the daily structure. We have a high formed, and in the best case, it forms another one inside the time window or after it. That would most likely give us the weekly cycle confirmation if the trend line gets broken. That would mean we want to see this low holding. Whether it gets retested or not is another story. Now let's have a look at the FOMC dates. Here we have been looking at the average time before the FOMC itself and the date itself. We had an average of around 5 bars on the 2-day chart, where we would look for some reaction before the meeting. And so far, we have often seen a high or a low forming before the meetings, followed by the actual reaction on the date itself. This time we had the low a bit earlier, but still it was a reaction before the meeting, That's where price touched the high time frame support level and formed the low so far. So I would say another successful example. Now, if we look at the dates where we had a move down or up into the FOMC date itself, we can see that a drop into the date is usually forming a low, and the rises, not always, but often give a drop. In the last examples, we can see the reaction before the FOMC, and then on the date itself or shortly after, we saw a move down before forming the bottom. Now we have a rise into the date as well, so while it can be bullish, as seen in the few purple line examples where we actually saw no reaction and just continuation up, those continuation moves happened rarely and mostly only during breakouts. You can see here it was a breakout and it just grinded up with no crazy moves. Then the next one was a breakout out again, and then on the last breakout price also didn't reverse. It just kept going up. So yes, it is possible that we see the same thing now, where it just breaks the trend line and continues upward. But it's worth noting that this happened only on breakouts. And most of the time, we saw a move down first when price was rising into the FOMC date. And by the way, bigger drops or smaller ones, they often form the low again. For example, if it makes a higher low or an SFP of the low, that would be fine. I just wouldn't want to see a weekly close below that level. And that's basically it for FOMC for now. The event is a bit later, so let's see what we get. The rise was successful, but if it's not a breakout from here, then as mentioned, more often we have seen a move down first before a rise again. And with that, we switch to our local levels. Here we can see that price locally is making higher lows and higher highs. The first low and the first high were formed pretty early in the month, and then price ranged for a while and has now made a new high. Based on the monthly averages, we fulfilled the average time for the low and the high in the first stage, but then price made a new high, which means that for the bullish case, a new high was made outside the time window for downtrends. And now it has entered the overall average, or the bullish average, for uptrends. That will stay as it is, as long as Bitcoin does not make a new monthly low. We can see the time window for the lows is getting closer and closer, which usually favors the bullish side, because it becomes less likely for price to make a new monthly low based on average timing. However, if price does manage to make a new low after that, then it often means something different is happening, and we could see lower moves. For example, an SFP, or even the average move for a bearish month. On the other hand, if it now holds the monthly low, and since it currently favors the bullish side, we potentially have new highs coming into the average time window for highs and uptrends. So the focus now is on whether price can hold the monthly low, and if we see new local highs forming. These smaller steps lead to the bigger picture, and from there, a rise toward higher levels. If you are bearish, you are looking for the level to fail. If you are bullish, you are looking for new highs to be made to strengthen the monthly low based on the average time windows. Now, locally we have a few levels. First of all, the Monday range is holding so far, but I personally am not trading that right now. What I would like to see is a rise into the trend line and yesterday's high, because we have the average gain for today right there. That would be a potential SFP trade location. We see a rise, best case with local structure, and then an SFP and a structure break. That's where a trade can be taken. Or an aggressive entry directly on the SFP, but keep in mind it can be volatile. So you should be ready with an invalidation, because you don't want to be in a trade if it turns into an impulse move up. For the longs, the average loss level for today is inside the Monday range. I personally am not trading here. My next levels would actually be below the weekend lows. Sure, if price doesn't revisit lower levels, then I simply stay in the trades I'm already in and wait for better setups. For now, the structure on the lower timeframes remains up, so a higher low is definitely possible. But it's just a personal choice that I don't want to take trades here at the moment. If we see lower, then yes. And if we see higher and structure breaks down again, then maybe that can be a hedge and a move down to the weekend lows. But for scalpers, these levels can of course be interesting. Overall, as mentioned before, I'm waiting for a move higher toward the long-term targets at 112K at least. Will we get shakeouts on the way up? Most likely, and that's why, if one happens, I'd prefer to get in on the next setup rather than entering here in the middle. And yes, I fully acknowledge that if it's truly bullish, it may just move straight up. But in that case, I'm already in some trades. So for now, I don't really care about new longs. Maybe I can get a local hedge and trade this range one more time. And that's basically it for BTC. Let's have a look at Ethereum before I wrap it up. On Ethereum, we can see that the level held very nicely, and we now have around a 16% move from the level itself. For now, it is hitting resistance, so we will see how it reacts here, similar to Bitcoin. A reclaim of this level, and I would say we're looking for new all-time highs on Ethereum. Until then, we need to see what reaction it gives at this level. Clearly, I would not be looking for longs here. I mentioned at the lows that Ethereum had the potential for a rise into this level, but taking a long here, well, that depends on the plan, of course. For me personally, this would be a TP area and then keeping a runner. By the way, as I see Ethereum moving higher while Bitcoin struggles a bit, we can look at some divergences. Here we have Ethereum and Bitcoin. Ethereum is making higher highs and higher lows, and Bitcoin as well, but clearly we can see that Ethereum made a much bigger move. So there are a few things to look at. First, Ethereum can be leading, and if it continues to keep the structure intact, then we look for the move to happen on Bitcoin as well, just a bit delayed. However, if we start to see some weakness now, then this can be the divergence that one can look for when planning a trade. Bitcoin is making a lower high, or more or less an equal one, and ETH is making a higher high. That is usually a bearish divergence. If you ask me whether it's a perfect one, then I would say no, because yes, Bitcoin made a slightly higher high, but the difference is still very visible. In the best case, we would see a clear lower high on BTC, a significant one, and then it would be a clean divergence. For now, it's more like ETH is leading, BTC is following, and yes, it can slightly be seen as divergence. So it's not a full signal, it's just confluence. Other things need to confirm first, for example, local market structure or losing support levels. So we keep an eye on this in the upcoming days. For now, if I look at Bitcoin's new high, well, it's just a shallow SFP of the high, still more or less a target. But whether we get a move down first based on the divergence and then aim higher needs to be seen. For me personally, it's not a clear divergence, so I simply wait and enjoy the show, and then we'll see where we stand. For now, I would like lower levels, but keep in mind that structure remains up, so the levels in between can still give a reaction. And in case it goes higher, I will just keep the longs that I have and look for a potential hedge short if a setup is given. For now, there is a slight divergence with ETH, but as said, not a full signal because BTC made a slightly higher high. So I would say it's confluence, but a small one, especially for people shorting here. Something to keep in mind in case you're taking shorts from this area, you have a small confluence with ETH for now. And well, I hope everyone makes some money on the moves while following your plan. And with that said, I'll wrap it up here. Wish you a nice day, stay safe, and see you in the next one.